Alright, for this video I wanted to do an example of Form 8936 for the clean vehicle tax credit. And in this scenario we're going to have a taxpayer that is claiming this credit because it was allocated to him from a Schedule K-1. So he's an investor in a partnership and received the K-1 that shows an allocation of the clean vehicle credit. And in this example we're also going to add one additional unique element here where the taxpayer is invested in this entity and it's a passive activity to the taxpayer. And so we've got to contend with the passive activity credit rules as well. So we've got the 8936 here, and it is part of the taxpayer's full return. So we'll go through the entire 1040, what forms and schedules are required. Now we've also got to include the Schedule E Part 2, right, income or loss from partnerships. So we'll go through this. We've got the 3800 in the return, and so the 3800 is required because when you have the clean vehicle credit and it's attached to a business use vehicle, it becomes a general business credit on Form 3800. And then we've also got the 8936, of course, and then lastly we have the 8582 CR, which is used to compute passive activity credit limitations. And then this form also has a number of worksheets, which we'll also cover as well. And then we've got the Schedule K-1 from the partnership. So our taxpayer here, Adam, is invested in this lawn care business set up as a partnership. So he's got the K-1 showing his allocation of income and the credit. All right, and so lastly, we have the one slide here covering some background on this credit and the unique aspects of the passive activity rules. And then we'll have some more details on the fact pattern itself, and then we'll go back into the tax forms. So if we start at the top here, some of the basics, the 8936, it can be filed by either individuals or businesses to claim this credit. And if it's filed at the business entity level for a partnership or an S corp, the credit is calculated at that level, but then it's allocated amongst the owners based on their ownership percentage. And so that the amount is reported on the Schedule K-1, and then the individual, when they do their 1040, also have to attach an 8936 to report that amount, but they only need to complete parts 1 and 2 of the 8936. So if we have a look at the 8936 quickly, normally when individuals are filing this and they bought the vehicle personally and they're using it for personal use, they do the 8936, but they also have to complete a Schedule A attachment to report more information on the vehicle itself. And then they move on to parts 2 and 3. But in this case, when it's passed through from a K-1, you don't have to do a Schedule A. You just have to complete parts 1 and then part 2 here for the business or investment use. All right, now the individual that receives this allocation also has to determine whether that activity is passive or a non-passive activity. Now that determination needs to be made anyway, right? Because you need to know, is this a passive or non-passive activity? Because I have to worry about passive activity loss rules, right? But when you have the credit allocated as well, that's also important because passive activity credits are also subject to certain limitations. And that's what we're going to see in this example here where we look at the taxpayer's Form 8582 CR. Now, to the extent that you are allocated passive income and passive activity credits, the amount of credit that you're going to be able to claim is essentially limited to the taxes that you owe on the passive activity income. So it might not make much sense right now, but hopefully it will when we actually look at these numbers. You have to calculate the amount of tax that you're going to owe on that passive activity income, and so that'll serve as the ceiling for the amount of passive activity credit that you can claim on the return. So when we talk about tests to claim this credit, generally, there's 3 kind of steps, right? So the first one is always the AGI limitations. So if your AGI is above these thresholds, depending on your filing status, you can't claim the credit at all. So this always applies when we're going through the Form 8936. The second test is this non-passive versus passive activity element, right? And that's because, for the reasons we already enumerated, when you have a passive activity, the credit is going to be limited to the taxes imposed on that passive activity income. Right, so then once we do that test, we move on to the last one, which is, do we have any tax liability? So when we look at our taxes on our taxable income, this is a non-refundable credit, right? So it means the taxes that we can use to offset the credit, to be able to use that credit, are limited to federal income taxes. So things like self-employment taxes don't count. So that's why we're working with our amounts on line 18. All right, so let's have a look at the fact pattern here. And then when we look at the form instructions and the numbers, hopefully this will all kind of make a little more sense. So we've got Adam taxpayer here. He's a single filing taxpayer in 2023. And he's employed full-time as a consultant working for a different company, right? So he's not related to this company at all, other than the fact that he's an investor. So he invested $7,500 into this lawn care business, and the LLC is structured as a partnership. So it's doing 1065s, and it's providing a K-1 to each of the owners. So Adam gets a K-1. Now, Adam does not materially participate in this business, right? He is just a limited partner, a passive investor. And that is important for these passive activity credit rules. Now, the lawn care business purchased a vehicle during the year, qualified for the clean vehicle credit. So it included an 8936 with its tax return filing, calculated the amount of credit, and then allocated that amongst the partners. So Adam's got a K-1 showing line 1 ordinary income of $482, and he has a line 15 code AY. Code AY is for clean vehicle credit of $150. So if we quickly look at the K-1, you can see what we're looking at here. So we've got Adam taxpayer as the partner. We can see in item L here the reconciliation for his investment. So beginning of the year, he was an investor, contributed $7,500, and he was allocated $482 of income, line 1 income, and had line 15 credits, AY of $150. So the $150 is going to be Adam's credit, Adam's share of that clean vehicle credit calculated at the partnership level. So if we start by looking at his 1040 page 1, get a sense of the income, his taxable income, and his tax liability. So we've got Adam taxpayer here. He's a single filing taxpayer. And we can see here on his income, he's got $145,000 of wages, no other investment income. And so the other additional income he has is coming through from Schedule E. So Schedule E Part 2, we have his income or loss from partnerships. Row A, we've reported the investment in the lawn care business. And we can see here in the passive income and loss section, we have passive income from Schedule K-1 of $482. All right, so the $482 is ultimately reported up here on line 8 as other income. So his total income, $145,482. Standard deduction of $13,850. He has a QBI deduction related to that investment in the lawn care business. And so his net taxable income here is going to be $131,536. And the total tax imposed is $24,969. All right, so now that we have the taxable income numbers, the total tax on that taxable income, and we've appropriately categorized the 482 as passive activity income, we can start to look at how much of this credit we can actually claim against our taxes. So if we're starting with the 8936, Part 1 has to be completed because this is the first test, right? Does our AGI fall within those appropriate ranges where we haven't eliminated ourselves from being able to claim this credit? So line 1A, we have his AGI from the current year. Line 3A, we have his AGI from his prior year, 2022 return. So for 2023, you're allowed to use the lower amount of your income from either year. And that's important because if in the current period your income was too high, you would be excluded from being able to claim the credit. But if you can look back to a lower amount of income in the prior year, now you might be eligible. So Adam's income here is in both years is below the $150,000 amount. So he doesn't have an issue with being eliminated from the credit, at least at that first stage. So in Part 2, we're entering the credit for business or investment use. And so if this was purchased directly by Adam and used for his business, let's say he was a self-employed sole proprietorship, He might have to do Schedule A and then report that amount on line 6. But in this case, he did not buy this vehicle directly. He's just an investor in a partnership. And so the amount of credit is reported in Part 2, line 7, new vehicle credit from partnerships and S-Corp. So there's that $150. Now, once we have that total, $150, it's reported on the Form 3800, which is the general business credit, Part 3, line 1Y. So if we go to the 3800, this is the general business credit form. I want to scroll on down to Part 3. And so in Part 3, we report current year general business credit amounts. And so on line 1Y, we have the amount from Form 8936. Enter the EIN from the K-1, right? So what entity is allocating this credit to you? And then in column F, we enter the credit based on it being a passive activity. If this was a non-passive activity, you would report the amount in column E. So we've got the $150 in column F for a passive activity. And on the 3800, Adam doesn't have any other credits. So the only $150 amount that we have flows back up to page 1 of the 3800 on line 2. Right? So passive credits from Part 3 go on line 2. If we have any non-passive credits from Part 3, those will go in column box 1. Right? So we've got the $150 in credit. Now we need to test, okay, well, how much, because this is a passive activity credit, how much of the passive activity credit is going to be allowed for 2023? So the line 3 amount, how do we get this $116 number? Well, now we have to kick it over to the Form 8582 CR. So we know we have a passive activity. Part 1, we're not doing any credits from rental real estate, so that's blank. We don't have any rehab credits, so that's blank. No low income housing credits, so that's blank as well. We took down to line 4, right? So line 4A, all other passive activity credits. So the $150, we pull this from worksheet 4. So worksheet 4 for the Form 8582 is where you would list all of those current year credits if you had multiple activities. In this case, we just have the lawn care business, right? And it's coming through from Form 8936 and the 3800. We have $150 in the current year. We don't have any prior year credits that were unallowed and being carried forward. So the total amount of credit that we have is simply $150. So the $150 is what's reported on line 4A. And now we need to ask ourselves, okay, well, line 6, enter the amount of tax attributable to the net passive income that we had allocated to us for the year. So we're asking for not what is the tax on the $150, what is the tax attributable to our net passive income. So the Form 8582 CR has another worksheet for line 6. All right, so if we jump down to worksheet calculation for line 6, we have 4 different values that need to be calculated here. So value A and B is the taxable income, including our net passive income, and then the tax on that amount. Well, these 2 amounts we've already calculated, right? So that's the amount of our taxable income from page 1, and that's the amount of our tax. So if I go back to page 1 of the 1040, we have our taxable income here, $131,536, and we have our tax of $24,969. So we enter those values up here on lines A and line B. Then we have to ask ourselves, okay, well, what is our taxable income without accounting for that net passive income? So we take our taxable income and we reduce it by that $482 of passive income flowing through from the K-1. And then we use the same tax tables and tax computation worksheets to figure out what's the tax on that amount of income without the net passive income. And so we take the difference, right? Subtract the difference, line D from line B, so $24,853 minus $24,969, and we're left with $116. So effectively what we're saying here is the amount of tax on our net passive income is $116. So once we have this amount, we can enter this on Form 8582 CR, line 6. So if I go back to 8582 CR, we have line 6 entered for $116. And so the difference here, line 7, subtract line 6 from line 5, and we're left with $34. $34 is going to be the amount of credit that is unallowed for the year because of the passive activity credit limitations. The 116 is effectively going to be the amount of credit that we can claim. So once we have those, we don't have any other parts to complete. So no special allowance for rental real estate. Part 3, we don't have anything there. No low-income housing credits. We're jumping down to Part 5 here. So passive activity credit allowed. We add up these lines, right? So line 6, which is what we did. 16, 30, and 36 are all blank for us. So we enter the total credit allowed, $116. Now notice here it says, see the instructions to figure out how to report this credit. And this is because this credit, depending on why you're completing the 8582, it could flow to a number of different forms. In our case here, this credit is going to be flowing back to the 3800 form for the general business credit. Right? So if we go back to the 3800, $116, that is coming from the 8582 CR. So we've got $150 of credit, $116 is going to be allowed for 2023, and then the difference is what's going to be rolled forward as an unallowed credit for passive activity purposes. Now that we have the 3800, we go through the rest of the 3800 and figure out how much of this credit is going to be allowed based on our tax liability. So if we're starting with Part 2, lines 7 and 8, we have $24,969 of regular federal income tax liability. We don't have any AMT, right? So we're not in AMT, so we don't have any taxes owed there. Lines 10A and B, we're not claiming any foreign tax credits, and we don't have any other allowable credits that are coming through from Schedule 3. So that's why those are blank. Depending on your return, your fact patterns, you might have something different there. All right, so the net income tax we have here on line 11 is going to remain at that $24,969 figure. So the net regular tax is the same, $24,969. Now the tentative minimum tax, so our AMT, $16,662. You can get this value from your 6251. So 6251 needs to be completed for AMT purposes. If we scroll down here to the bottom, we can see ultimately on line 11, we don't have any AMT amount, but you can use this to complete row 9, where you figure out what your tentative minimum tax is. Right, so I won't go into the AMT form in too much detail, but that's where we're pulling the 16,662 for the tentative minimum tax. So line 16, we subtract 15 from line 11, and we're left with $8,307. Line 17, so the initial amount of this tentative credit here is the smaller of line 16 or line 7, or sorry, the smaller of line 6 or line 16. So line 6 is $116. Line 16 is $83.07. So the smaller amount there is going to remain the $116 figure. So we move on to Part 2, figure out the allowable amount of credit. Note here, if we're not required to do anything on lines 22 through 24, then we can skip all of these and just go down to line 27. So 22 through 24 have to do with the general business credits related to empowerment zone credits. So, for example, you notice here they're asking, give us the amounts from line 3 of Part 3. If we look at the Part 3 form here, line 3 has to do with Form 8844, so that's an empowerment zone employment credit. We don't have anything there, right? So we don't have anything from line 3. We don't have any line 5 amounts, so no specified credits, no empowerment zone credits. So that's why most of this Part 2 is blank for us. It's keeping it pretty simple. So on line 27, subtract line 13 from line 11 above, right, which we've done. So line 13 is 0 from line 11, and we're left with 24,969. Add line 17 and 26, we're left with the $116 figure. Subtract the 2 from there, we get $24,853. And the same issue as above, right? So general business credit, line 5, part 3, doesn't apply to us. So that's why all of these are zeros. We don't have any carry forwards. So ultimately, the amount of credit allowed for the current year, we're going to add lines 28, which is the $116 figure. We're going to add 37, which is 0. And we're left with $116. All right, so $116. For individuals here, we're reporting this on Schedule 3 of Form 1040, line 6A. So if I go to Schedule 3, this is where we report the non-refundable credits. We are going down to line 6, other non-refundable credits, and line 6A is that general business credit of $116. Now, for those of you that had the personal use credit, you would report it down here on 16F, right? So you had clean vehicle credit 8936, but if you have a business use component of that clean vehicle credit, it's going to be a general business credit reported up on line 6A for the Form 3800. All right. Now, what's also important here, let's look at the carryovers. Just so remember, we're accounting for all this as we should be. So we have Worksheet 8, the unallowed credits. All of this is being allocated to the lawn care business because we don't have any other activities. So we have $34 of unallowed credit. The allowed credit there is $116, so unallowed, again, the same $34. And if we look at our unused general business credit, the roll forward schedule, we have for Adam the 8936 Part 2 new clean vehicle credit. We had $150 available, $116 was allowed in the current period, and we have $34 being carried over to 2024. All right, so ultimately, when everything is said and done, right, so we've got Schedule 3 for $116. That's reported up here, line 20. Amount from Schedule 3, line 8, $116. So our total taxes of $24,969 are reduced by the $116, and that gives us this net total tax liability of $24,853. So when everything is said and done, right, looking at that 8936 form, Adam got allocated $150 of credit. He was able to use $116 in the current year because of the passive activity limitation. And so the remaining $34 just gets rolled forward to next year, and hopefully he can use it next year. All right, so that covers it for this tutorial. I hope that was helpful. I have other 8936 videos. I'll put all the links in the description below there. And as always, appreciate you watching and hope to see you again on the next video. Thank you.